Silicon Valley Bank, it's in the news. It's all over the headlines. Let's talk about it. I'm Rizek, CPA certified financial planner, and I'm going to break it down for you. There's been an enormous amount of news breaking in the last 72 hours. I'll do my best to catch you up to speed. Let's start off with some disclosures first. This is only for educational purposes. Late Wednesday and Thursday, the stock fell over 60%. And if you're watching this on Friday, the stock has halted trading. Means you can't buy or sell it right now. As of right now, the FDIC said it's going to go into receivership on Silicon Valley Bank, and financial regulators are taking control. So originally, Silicon Valley Bank was trying to find a buyer, another bank or financial institution, to come in and purchase the bank. But so many customer deposits were being withdrawn that the valuations on the bank were inaccurate just minutes later. Multiple attempts took place for the bank to raise capital, either through stock issuance or convertible options. But after multiple attempts, they just kept failing. This caused many customers to take even more deposits out of the bank. And if you didn't know, Silicon Valley Bank really has a target niche market, going after venture capital, startup, and private equity funds. So if you're a tech company, and you don't have to be in Silicon Valley, but let's say that you are, and you're raising money, you just had a capital raise last year, it's likely that you keep a large chunk of your assets and savings, at least short-term assets, with Silicon Valley Bank. You know, that's a risk that Silicon Valley Bank took on because they were going after this startup market. Now, most banks are overcapitalized, and they have been for almost a decade. That means that a lot of banks across the country have excess cash reserves, above and beyond that of which the Federal Reserve requires them to keep. Now, you probably already know that a bank doesn't keep all of its deposits in cash. They lend out a healthy chunk of that cash through operations like financing mortgages, car loans, that kind of thing. Silicon Valley Bank really focused on that venture capital and private equity space. Many analysts think that this widespread bank run will not at all spread to other banks. Well, I don't want to be one of those people that creates a lot of fear. This is not what I'm about. Morgan Stanley said that it was highly idiosyncratic, meaning that they think it's a unique and one-off event. So what exactly went wrong with SVB? Well, there's a few things, but let's talk about one specifically. Because the US Federal Reserve has been raising interest rates so much lately, that has made the cost of capital, or the cost of money, much more expensive. Because SVB works with high-flying tech companies and a lot of companies in the venture capital space, those companies, the customers of SVB, really slammed on the brakes. They tapped their deposits of cash, and the venture capital has just dried up. Now, most banks have a wide variety of customers, but SVB was very focused on this market. And that has really kicked off the large amount of deposits being withdrawn. Follow me for more tips.